The most important power of a central bank is forward guidance.
Good afternoon.
They're talking, they're messaging, and it's just talking. Central banks can move markets simply by messaging their intentions in advance.
We on the committee have a view that inflation is going to come down not so quickly. And in that world, if that forecast is broadly right, it would not be appropriate to cut rates, and we won't cut rates.
They do that because they want to be able to tell the markets what is going to happen with monetary policies so that they don't surprise markets and so that they can have a gradual and almost immediate effect. Of course, they end up surprising markets here and there, but we'll get into that. Now, why am I telling you all this? Well, let me show you something into action. So it's December 18, 2024, the Bank of Japan is about to meet, and the market is undecided on whether they will hike rates or not. Consensus is that they will not hike, but there are some risks priced into the market that they might. So either way, there's no real scenario fully priced in, because if they hike, the Japanese yen strengthens, and if they cut, the Japanese yen weakens. So what do we do here? Do we just randomly guess what we're going to do based on our subjective opinion? Or instead, do we get informed by searching for whether the Bank of Japan did send some hints in advance? Well, of course, we get informed. Specifically, we hunt for forward guidance. And there are a couple of ways we can do that. So first, we can look at some Google searches for Bank of Japan and read articles on the matter. But if we don't want to spend too much time on that, we can look at some historical headlines on financial juice, for instance. I personally do that on Twitter or X, whatever you want to call it. Just type the keyword financial juice, Bank of Japan, financial juice, BOG in the search bar and hit search. Then sort for latest, and there you go. You can now scroll through all the Bank of Japan comments over the past couple of weeks. So, what do we find here? Well, there you go. That's forward guidance. The Bank of Japan is saying loud and clear that they don't necessarily see the need to hike rates at this meeting. Obviously, this does not completely remove the possibility of a hike, but it certainly skews the balance of risks well against that, meaning the most likely scenario is clearly a no hike. In fact, notice how USDJPY already started to price in that in advance. As soon as the comment hit, as soon as the Bank of Japan said those words, the JPY started weakening and USDJPY started rising. Why? Because the market was already pricing the Bank of Japan on hold scenario. Markets and moon expectations. So with that said, December 18, 2024, the Bank of Japan is about to meet, and now we clearly know what's the most likely scenario. They want to stay on hold, and that will likely cause the Japanese yen to weaken after the event or during the event. So there you go. No more guessing. Now you're making informed decisions. That's how to do it. But let me show you another example. Always from the Bank of Japan. July 2024. The Bank of Japan drops a golden comment. They're considering a rate hike for the next meeting. Now when those comments hit the wires, it's not random at all. Central banks don't toss out comments like that for fun. They're preparing markets, nudging expectations so that nobody gets wrong. Then fast forward to July 31st, the Bank of Japan meets. Economists, for some weird reasons, are expecting the Bank of Japan to stay on hold. They don't have a clue in this case. Because what happens? The Bank of Japan hike rates. Economists obviously surprised, us not so much. We read the sinews. We take note of the forward guidance. In other words, what I'm trying to tell you is that forward guidance, what central banks say, is not just another boring fundamental term with no practical applications. No, it's quite the opposite actually. It's your hedge for knowing what a central bank will do next.